How to start investing? Beginner must watch to know the correct way in investment. Every investment activity has its own risks. However, you can minimize this risk by applying the right strategies. Here are some strategies on how to invest money effectively. 1. Determine the investment period. First, you can apply the right way of investing money based on the achievement period. This will help you achieve the target according to the plan. Generally, the investment period is divided into 3, including the following. Short-term goal, 5 years. 2. Determine the investment instrument. Before choosing an investment instrument, consider your profile as an investor. Generally, there are 3 categories of risk profiles, including conservative investors, namely investors who like stable investments. Moderate investors are investors who can still accept stock fluctuations and are quite satisfied if their investments exceed the inflation rate. Aggressive investors, namely investors who are ready to take the risk of losses with sharp fluctuations. There are many ways to invest money that you can choose to start investing. For example, in capital market instruments, such as stocks and mutual funds, or investments in banks. Here is the full explanation. Mutual fund investment. One of the easiest ways to invest money for students is through mutual funds. Especially if you don't have free time and skills in calculating the risks of investing, because there will be investment managers ready to help. The opportunities provided by mutual funds are very wide open for potential investors. The reason is, there are various mutual funds that can be taken, such as the money market, and the stock investment market. Mutual funds are one of the best ways to invest money for beginners with small capital. Stock investment. Today, many young people are interested in learning about how to invest money through the stock market. Access to invest in stocks is even easier. It can even be run through an application on a cell phone. The profit generated from this investment is obtained from the buying and selling activities of share ownership and dividends from the company. Minimum purchase and sale of shares is 1 lot or equal to 100 shares. Invest in bank. How to invest money in a bank that you can try is a time deposit. The risk of this investment tends to be very small, because it has been guaranteed by the Deposit Insurance Corporation. Basically, the principle of bank deposits is the same as saving. You save money with some rules and it cannot be withdrawn at any time. Withdrawal of money can only be done within a predetermined period of time. 3. Open an investment account. Before starting to invest in the capital market, you must have an investment account. If you want to start investing online, you can make it through a securities company. Generally, the documents that you have to prepare when you want to open an investment account are your ID card, taxpayer identification number, account number, and filling out the initial investment form. 4. Diversify investment. Diversification is a way of investing money by dividing your capital into several types of assets, such as stocks, mutual funds, gold, and deposits. This is so that you get the maximum profit. In addition, diversification also helps you to reduce investment risk by preventing a total failure if one of the assets suffers a loss. Because you still have other assets that are experiencing profits. 5. Starting from small capital. No need to wait until you have a lot of money to start investing. The reason is, with a capital of Rp. 100,000 you can already invest, one of which is in mutual funds. In fact, on some e-commerce platforms, you can invest in gold starting from only 10,000 Indonesian rupiahs. As a beginner, start investing with little capital. Choose the type of investment that is guaranteed and has a good history for the last 5 years. As a reference, you can attend seminars on tips on how to invest money for beginners on the internet. 6. Do it consistently. When you start investing, you must have the right strategy in achieving the desired target. For example, the dollar cost averaging (DCA) strategy, which is a way of investing money on a regular basis where every month you will monitor daily stock market movements.